So what's up guys, Zen here with Zen Trading Academy. Welcome back to another video. So today I wanted to make a more sit down and talk kind of video. I've made a lot of mistakes trading over the past 9 months, but even though these mistakes have costed me a lot of money, I wouldn't call it a waste because there's so many good lessons to learn. So today I'm going to share with you 5 of my biggest mistakes and what you can learn from it. And before we head in the video, you already know it, help me smash the like button and subscribe if you're new. It takes a lot of time to make all this free content for you twice a week, every single week, and all I ask for is your little support to hit the like button, and I really appreciate it. Now, into the video. So my mistakes mainly revolve around 2 main drivers of emotions in the market, which is greed and fear. My first major mistake stems from greed in trading, and I'm talking about sizing up into trades. Now, don't get confused with scaling up, because to scale up, it means that you're going to increase your share size and trade consistently. What I'm referring to is buying more shares when I feel like I can make more money. So the big problem when it comes to buying more shares that affects me the most is when I'm not used to trading such a large share size, I will tend to be more afraid because if it goes wrong, I lose more money. And unfortunately, that is the case most of the time. Whenever I size up, my losses seem to be bigger, but my wins never get bigger. Because when I size up, I get scared, right? So I try to lock in my profits quick, and at the end of the day, I tend to make the same amount of money on a bigger size compared to when I trade a normal size, because on a normal size, I get to ride the move and catch it, but on a bigger size, I just get too scared, right? I'm playing such a big size, I don't want to lose the profits, and I end up cutting all of my trades. Another reason why buying more shares than I should is bad is because it messes up with my risk management. I have a defined risk level, which I use every single trade. I have a set amount of money that I'm willing to lose every single trade just so I can control my losses. But by buying more shares, inevitably, I am risking more money if I'm following the same parameters of my trade. And in the long run, this messes with what I'm used to. Imagine driving on the right side of the road for your whole life and suddenly driving on the left. This random increase in size led me to my second mistake, which is making mid-trade decisions. These are one of the worst things you can do, especially if you are a new and learning trader. When you're learning how to trade, having a clear-cut plan with all of your parameters set is one of the most essential parts of succeeding in the long term, right? It helps you build the good habits so you don't have to think so much during a trade, because when you make mid-trade decisions, you put more luck and more chance into the game. So another reason why mid-trade decisions are bad is because it adds too much complexity to the trade. You want it to be as simple as possible. You want the trade to be as clear-cut as possible. So if you find yourself making mid-trade decisions often, maybe it's time to go back to your strategy, go back to the drawing board, and try to refine all of the entries and exit points of your strategy so that you don't have to think so much when you're in a trade. And you can just sit back and let the trade play out. Now, the third biggest mistake that I have done is to think about the money. Thinking about the money will bring your emotions. Trading is a weird thing. We go into trading because we want to make money, but those who go far are the ones who don't think about the money. When you just started trading, you're gonna miss a lot of moves. And whether you like it or not, you will have FOMO, which is the fear of missing out. When you've missed a few trades, you're gonna be thinking, I could have made this amount of money, I could have made that amount of money, right? And in your next few trades, you're gonna try and make it up. You think the market owes you the money because you've missed it, I should have made it, let me make it up on this trade, right? You're thinking of how much money I want to make instead of how much the market can give. And once you start thinking about the money, that is where everything goes downhill, because the strategy just goes out the window. You forget where you're supposed to take profits, and you're only focusing on I need to sell it over here to make this amount of money. And that will cause you to miss your proper take profit, and you will hate yourself for it. So this is one thing that I learned the hard way, and either you force yourself to understand it and prevent it before it happens, or the market will inevitably teach you it in the hard way as well. And of course, this problem of thinking, if I buy here and sell there, how much can I make, will lead to my fourth biggest mistake, which is taking anticipation trades. What I mean by anticipation trades is, since I trade breakouts, there is a very clear-cut level for me to buy in. Anticipation trades is when I get greedy and try to buy in before it breaks out, right? I try to buy it in the consolidation, or I try to buy it when it starts to push up a little bit before it hits the day high. And of course, that always ends up on the losing side for me. A key part to every strategy is the confirmation. You need to see confirmation before you enter. And me being greedy, right? When I see that, okay, breakouts do work, how can I make more? Then the most basic way is, I just buy earlier and I'll make the larger margin. Wrong. What I didn't take into account for was all the times that the stock barely reached the breakout level but failed. I didn't see all of those because they never touched my confirmation before, And obviously, without confirmation, the chance of the breakout succeeding is very, very low. So to all of you who think buying earlier leads to more gains, you must also realize that there's a lot of stocks that barely reach your confirmation and fail, and you have to take that into account. Please do your testing, okay? Buying earlier might lead to more gains, but you will have a lower win rate. And last but not least, the problem that I'm still struggling with, and I think every trader will have problems with as well, which is not trusting your strategy. And even though you know your strategy makes money, sometimes when you hit a losing streak, you start to doubt your strategy, you start to doubt yourself, and not realizing that this is a probability game and that taking multiple losses in a row is very normal for trading. And that is when you try to make little tweaks to it. And without realizing it, these small tweaks add up and you will end up losing your core strategy. And this is why statistics is important. If you understand your long-term return for your strategy, you should have more conviction to stick to it and ride it out over the next 20 to 50 trades. If you want to make changes, test it out beforehand and always remember to give it some time to work out. Don't just give it 2 to 5 tries and then make your conclusion from that. Give it at least 20 to 30 trades so that you get a larger sample size and your results are not too affected by randomness. So my 5 biggest mistakes. Hopefully this video will help you be more aware when you are starting to see signs of yourself making these mistakes. And I think the best way to learn is learning from other people's mistakes, because if you don't learn it from me, you're gonna learn it from yourself when you make these mistakes. So hopefully this video helps you prevent these mistakes in the future, and if you can relate to these mistakes, let me know in the comments below, because you are not alone. And as usual, I hope you've enjoyed this video. Hope you like the face-to-face kind of videos that I'll do once in a while. Help me hit the like button, I really appreciate, and I'll see you in the next video. Take care.